Hello friends, welcome to the Block Thrasher Daily Morning Crypto Update, where we are shattering the complexities of crypto with news, commentary, analysis, research, and education. Today is February 23rd, and it's a little bit of a painful day. It absolutely is in the market. We're seeing a lot of red. We've been seeing that since yesterday. The market took a turn, started a little bit of a downward trend. However, things are actually looking good in the sense that it seems like the bleeding is beginning to stop and we're starting to see a bit of a pause in the decline of prices today. That is good news, and we're going to look at that a little bit later. However, we're also going to talk about this ETH gas problem. The ETH gas prices have been a huge issue of late, and it's having ramifications, and I think it will continue to have ramifications moving forward. It's been something that's being discussed quite a bit in Twitter and on the Facebook social media groups, and so I think we're going to just need to talk about that for a little bit and look at some of what my projections and expectations might be regarding that. Now, every time the market has a turn, has a downward turn, every time Bitcoin drops 10 or 20%, which is actually quite frequently, there's a number of people that come out and start to throw out FUD, which is fear, uncertainty, and doubt. And they start to say, look, we told you, Bitcoin, it's dead, it's over. These obituaries of cryptocurrency and Bitcoin in particular have happened many times. And the website 99bitcoins.com has a running tally of these Bitcoin obituaries. And it shows here in their record of it that Bitcoin has died 401 times. And the most recent is Bill Gates. None other Bill Gates has come out and said Bitcoin is only for people who have as much money as Elon Musk, sort of insinuating that everyone else is going to get destroyed and is going to get burned. And you know what's interesting and curious about this is that they keep saying things like this and they keep saying things like this, but yet over time, as we watch what happens, the evidence shows the exact opposite. And people who invested or got into Bitcoin or cryptocurrencies early on have done phenomenally well. And we're going to look at a story about that today, which shows that people who were into Bitcoin at the same time that people got into Uber actually have done significantly better than Uber. Let's move on to our first segment of the day, which is the word of the day. Polyglot. Polyglot is just another word for bilingual. It simply means a person who knows or uses several languages. The word poly, obviously, we see that all over the place as a prefix in the English language to talk about many, right? And glot, coming from the Greek for glossolalia, for languages, for tongues. Polyglot, many-tongued, many-language, a person who knows and is able to use several languages. Polyglot. All right, let's move over to the market and look at coinmarketcap.com and see where prices are at currently. Bitcoin. Now, see, here's the thing about it. Yes, Bitcoin is down 9.52% in the last 24 hours. However, that being said, that is only a 1.31% drop in the last 7 days. So there really is no indication that we're moving into a bear market at all yet. We've had a couple of rough days. Monday typically is the day of the week in which we will often see prices trend down. Obviously, as we roll into the end of February and move towards the beginning of March, March is historically a month in which cryptocurrency suffers a bit. So we will see. Nobody knows, of course. There's been a couple of negative news items coming out and some positive as well. We'll see what happens here. But overall, Bitcoin is still hovering around the $50,000 mark, which is incredible. We're at $48,589 currently, down 9.17%. I think what happens, though, is people sort of look at the red and they look at that we're down 10% or we're down 20% over the last couple of days, and sort of the emotional response is, everything's crashing, you know. In reality, we're still doing phenomenally well. And so this is an opportunity, and these are the times to jump in and grab and stack a little bit more if you have the capability to do that. Because this market, even if this market does crash, though, over the long run, if you have to hold for the next upswing, that's not necessarily a problem. So long as the money that you're putting in is money that you don't need immediately. Now, if you are throwing in your rent money, or you're throwing in money that you're going to need in the next month or 2 or 6 or even year, then that probably is not the wisest thing to do, and you wouldn't want to do that. But if you are looking to make a long-term investment and you have a time frame of a year, 2, 3, especially 4, you cannot lose unless something totally unexpected that's catastrophic happens within the market, which I just don't think is going to happen, but that is always a possibility, right? So we just have to throw that caveat out there. Now, moving on with the current market prices, Ethereum is actually up just a little bit from what I saw a couple of hours ago at $1,400. Now it is at $1,589.55. That's an 11% drop over the last week and 8% drop in the last 24 hours. So Ethereum is taking a little bit of a hit. Now, Binance Coin, BNB, which has catapulted into the number 3 spot in terms of market capitalization, is still up a whopping 76% this week. Yeah, down 10% in the last 24 hours. But I tell you what, for people who are holders of Binance Coin, BNB, and have large positions, they have got to be very happy still. And I do believe that one of the reasons why this is happening has to do with what we're going to talk about today as our primary topic, which is the gas fees and the fact that we're starting to see a lot of projects move over to these alternatives, and Binance has provided one of the biggest in the Binance Smart Chain. So Binance is now sitting at $231.70, down 10% in the last 24 hours. Polkadot, again, another top 10 coin that is actually doing well when we look at price increase over the last week. It is up 12.46% in the last 7 days. It's taking a hit currently, down 2.81% at $34.46, but overall holding really strong. The same goes for Cardano, which is up 10.57% in the last 7 days. It is currently down 2.43% at 96 cents, and it has been kind of moving up and down overnight, touching the dollar mark and then going back down into the high 90s. So we'll continue to watch that. Now, XRP is down on the week 12.91% and down 12.3% in the last 24 hours. So it really has just in the last 24 hours gone back to where it was about a week ago. It is currently 47 cents. Litecoin has taken a hit in the last 7 days, down 16.55%. It is at $176.07. Chainlink is taking a similar hit in the last 7 days, down 17% to $26.28. Uniswap is still up for the week at $14% increase, $23.57. And Dogecoin is continuing to see a sustained decrease with a negative 16% in decrease at 0.04659 cents is where Dogecoin is currently sitting. Well, we're going to continue to keep an eye on this. My expectation would be that we'll see prices turn around a little bit today and head back up. But who knows? We'll watch that. All right, moving on to the story of the day. This issue of the Ethereum gas prices and the Ethereum gas price problem. Now, you can see where Ethereum gas prices are at currently at etherscan.io. They have an Ethereum gas tracker. And right now, if you want to get a transaction to go through quickly, the high rate is 900 GUI, which is $29.11. And if you pay that amount, you should get your transaction through within 30 seconds, right? The average price of 545 GUI will cost $17.63 and get you through in 4 minutes. But here's where it gets kind of crazy: is that's for sending Ethereum transactions, just your standard typical. You're going to send some ETH from one wallet to another. But if you want to do an ERC20 transfer, the high price right now is $90. And if you want to do a Uniswap transaction, the high price is $277.22. And if you want to do an add or remove liquidity from the LP tokens on Uniswap, you're looking at $242 for the high. Now, this just is not viable, and this is a huge and significant problem. And so what it's causing to happen is that a number of projects that would be launching, that have launched ERC20 tokens, or that would in the future, are beginning to look at that and say, well, this is a problem. Obviously, our users are not going to be able to do the things that we want to do because it's not sustainable if we're going to have that type of problem. There's going to be so much network congestion within the Ethereum network that the fees are going to be pushed so high. So just really briefly to explain that, what happens with Ethereum is that when you do a transaction, you have to pay a gas price. Now, if there was no congestion, if it was just under normal circumstances where there was very few transactions going through, the prices of those transactions and the gas fee would be relatively low. But then what happens is when there's too many transactions hitting the network, and they can be just regular transfers, they can be smart contract interactions, and that's what's happening with the DeFi boom and craze that's happening. You've got Uniswap, and you've got we can go and actually look at again, if we go over here on etherscan.io, we can see that Uniswap is swallowing up 10.73% of the network usage in the last 3 hours, and then Tether is right underneath that. The USDT Tether stablecoin that runs on the Ethereum network is very close to 10% as well. So those top two are just gobbling up 20% right there, and then USD coin comes in underneath that. 1 inch exchange comes in underneath that. We drop down, we see there's some smaller ones that aren't as significant. So what's happening is so much is happening on the decentralized exchange Uniswap, and so much is happening with transfers in and out of the stablecoin Tether, that that sucks up all of the available. So Ethereum has a certain amount of bandwidth, is the way that you can think of it. And then when that reaches capacity, what ends up happening is the miners, in order to process those transactions, they start to grab the higher paying transactions. So it opens up a bidding type of market, basically, where if you want to send Ethereum, you've got to up your gas prices to get that transaction through more quickly, if you want it to get through more quickly. Now, in theory, if you don't up your gas prices, your transaction should still go through. You're just going to have to wait. And so that's how that whole process works. Now, something can happen with this that you need to be incredibly careful of, and that is that when you're in the Ethereum wallet, be it MetaMask or whatever, and you're adjusting those gas prices, do not make a mistake. Be careful. Do not move too quickly. This story just illustrates that. Someone paid $36,000 for one Ethereum transaction yesterday. It's insane. Now, it could be that this person was transferring a huge amount of capital and doing something in a liquidity pool on a Uniswap and just wanted to do it, wanted to pull out or something and paid that price. Or they might have made a mistake, and this is where the caution comes in. Be careful about this. The gas price that was paid on that transaction was 500,801 GUI. Now, if we look, I think it's GUI. If we look back at etherscan.io, the normal, it's high right now. When I loaded this screen, I could refresh and maybe it's gone down, but 900 GUI would get you a 30-second transaction on a normal transfer, right? Well, this person went way beyond 900 to 500,000 GUI with a transaction fee of $35,894. Unbelievable. But here's what could have happened is, when entering the gas price, they might have been trying to change it from 500, which would be pretty standard, typical, if we look back here, 541 GUI is the average right now. So that would have gotten a relatively quick transaction at about, estimating 4 minutes. But they might have been trying to up that to 800, and so they put in 801 and didn't realize that they hadn't removed the 500 and were just tacking that on. And so instead of entering 800, they entered 500,801 GUI into the wallet, into the gas fee that they were willing to pay, and boom, next thing you know, they're out $34,000 if they had that amount. Obviously, the transaction would have failed. That's 25 Ethers, by the way. Obviously, that transaction would have failed if they didn't have that amount of Ether in their wallet. But apparently, this person did, and this transaction went through. Of course, it's just a speculation that that's what happened, but it's that amount of 500,000 is roughly 1,000 times more than it takes to initiate a transaction, even in times of heavy network overload. So be careful. But what I wanted to illustrate, what I wanted to say, well, actually, part of what's happening with this issue of these high Ethereum gas fees is it's causing a lot of developers to move to other platforms, and that is talked about here at bitcoinist.com. An article states with the title of "The Dark Side of Ethereum." For the last 6 years, Ethereum has dominated the smart contract landscape and has been arguably the only viable platform for launching decentralized applications, and that's true. There simply was no other option in the beginning. And it's funny, someone posted in the Facebook group yesterday to go back and look at the Wayback Machine, right, or archive.org, and look at where you can see websites from the past. And so you can go do that with coinmarketcap.com and go back to 2013, 14, 15, 16. And it's interesting to see how, if you look at 2016, 2017, how many tokens, Ethereum tokens, were in the top 20, 30, 40, many of which have just sort of disappeared completely and are really not existent any longer. And then, of course, there are those that have been successful and come through. But at that time, Ethereum was it. If you were a developer and you wanted to create a dApp and you had a great idea, that was it. And so it had built a very large developer community, and Ethereum gained first mover advantage, of course, and so that's why it's number 2 currently. But in the last year, Ethereum's limitations have begun to show, leading to an exodus of sorts among its once fervent developer community. And in this article, the author takes a look at 3 of the main reasons why developers are migrating from Ethereum to alternative platforms. And number 1 is the fees. The fees are just a major barrier. If you've used Ethereum more than a few times recently, you've seen these high fees. Maybe even you've run up into a situation where a transaction just sort of got stuck on the network. And I have one that has been sitting there trying to process and then I ended up trying to cancel it, but it's been like 5 days and it still hasn't dropped out of the mempool and cleared, and it's just not going to go through. And so this is a huge problem. As decentralized finance and stablecoin usage on Ethereum have skyrocketed in the last year, so has too the average Ethereum transaction fee, which recently reached over $25 a pop, and potentially several times higher when invoking a smart contract function. So understandably, developers are generally trying to build platforms and applications that are accessible to the widest possible audience, and not just people who can, are doing massive transactions and don't care about a $25 fee to do something, right? And especially if you're trying to build a platform where it's an exchange or maybe a synthetics market, and you are interacting with a smart contract and you're trying to buy and sell and trade in something like this, you just be eaten up by the fees, and so that limits the things that can be done on that, of course. Well, what's happening is interoperability is the agenda of the day, right? Is becoming one of the buzzwords, also sometimes spoken of as chain agnostic. So a number of the DeFi projects that are coming out, they're trying to be chain agnostic. They're trying to be interoperable, right? The idea being that we don't have to operate on top of the Ethereum blockchain alone, but we can actually interact with different chains, cross-chain swaps, native, and these sorts of things that are happening. Ethereum has seen some improvement in this area with the development of numerous token wrapping protocols. There's layer 2 swapping platforms, and we've talked about that, and bridges. It still offers only limited interoperability with other blockchains currently, though. Now, if we jump over to CoinMarketCap again and go and take a look at, there is this new menu at the top, which is interesting, and the menu itself sort of illustrates some of what's happening here with this, and it is such that you've got 2 new items. There's a Polkadot Eco tab, which when you click on that lists all of the projects that have launched on the Polkadot platform. And you've got Ren and Ocean Protocol and Energy Web Token and Polkastarter and Anchor and Original Trail and Reef and Acropolis and Math and Sora. And so the list just goes on and on and on and on. And if I keep scrolling down to the bottom, that's 46 total tokens that have launched on the Polkadot platform. And obviously, every single one of these has chosen to use that platform instead of the Ethereum platform for the very reasons that we're talking about. And just as a side note, this might be a good thing to look at if you're looking for new projects to invest in that might potentially see some incredible gains in the coming years. I would say look at the Polkadot ecosystem, look at the Binance Smart Chain ecosystem, which I was just going to talk about here in a second, and even more than that, look at the Cardano ecosystem that's going to be launching. Smart contracts are coming in the next couple of months, and there's going to be native tokens are already coming on board. There's going to be a ton of stuff that's going to happen this year. I mean, I really, really do believe that 2021 is going to be the year of Cardano. It's going to be incredible. But if going back to CoinMarketCap, they've got Polkadot Eco and they've got Binance Smart Chain ecosystem listed here in the menu at the top. And if we look at the Binance Smart Chain tokens, we've got PancakeSwap, which is like Uniswap, is number 2, and it's up 81% in the last 7 days. So many of these are just up significantly. Venus up 37%. Dodo, which is a Chinese-based DeFi platform, up 122.11%. Obviously, they're all taking hits in the last 24 hours, as is the entire market, but you got Alpha Finance, Injective Protocol, Vi, Bakery Token, and the list just goes on. Now, see, Math shows up here, and Math was also on the Polkadot. So there's an example of some of that chain-agnostic stuff that I'm talking about, right? You got JewelSwap, BurgerSwap, Cream Finance, which has been in the news quite a bit. Bondly. Bondly is running on. Bondly is interesting because it's another example of a project that is looking to be platform agnostic. They will be launching on Cardano and partnering with Cardano as well. They are currently an ERC20 token on Ethereum, and they are also on the Binance Smart Chain. So they're solving these issues, but this doesn't necessarily bode particularly well for Ethereum, I don't think, in the long run. If we scroll down, there are currently 35 tokens listed here, and so those all of which might be projects to look at. All of this is just to illustrate, though, what is happening here, and Ethereum has that first market mover advantage. Ethereum has the Solidity language and a lot of developers, but what's happening is that Cardano is going to have an ERC20 converter where they're going to just be able to, projects that they want to convert over are going to be able to just throw that ERC20 token in it. The conversion gets done automatically, and then they can start using the Plutus programming language. And Binance Smart Chain does all of the same things with the same languages as Ethereum. And so then there's others that are doing the same. There's that we are not even talking about with Phantom and Avalanche and Algorand, and the list goes on. And so it's really good from the standpoint of if you're a developer and you're looking to launch a project, you have a lot of potential possibilities of platforms that you can use, and you can evaluate all those, and you can determine which one is going to bring me the greatest tech advantage, which one is also going to bring me the biggest community along with it. And that's really important, and that's one of the items that's in the news today that's super bullish about Cardano. Cardano has won the title right now currently as the #1 platform in terms of having the most money within its development fund. Cardano has a development fund that's part of its Catalyst platform. They had 8,000 people registered to vote. So just roll back that a little bit. What Catalyst is it's the voting mechanism for governance within the Cardano platform. It is where Cardano holders will be able to vote on which projects they want to see funded, or if there's proposed changes to the platform, it will happen there. And they had 8,000 people registered, which is more than any other platform. within that platform, you're going to be able to get involved, and you're going to be able to have an influence, and you're going to also get paid for doing that. So there's a ton of money just sitting there, essentially, within that Cardano ecosystem, ready to be distributed out to developers by the community through the voting process within Catalyst to fund those projects. And I think we're going to see some incredible things come out. And so again, that's a super compelling incentivization for developers to either move over or to get on board and do the chain agnostic thing and also work on top of Cardano, or to just, if they're launching a new project, to go with Cardano solely. And Polkadot has a similar thing going on as well, and Binance Smart Chain the same thing as well. So all of these are stepping up, and Ethereum is now, to just be objective and to roll this back a bit with Ethereum. Ethereum is moving as quickly as they possibly can to launch the 2.0 upgrade, to become proof of stake, and to do all of the similar type of things that these other projects sort of did from the get-go. My concern with that, and I hope it just ends up being a concern, I would love to be wrong. I would love to see Ethereum pull it off and fix these problems, the problems of performance, scalability, gas prices, etc. It goes on even more than that. There are other issues with smart contracts and how they operate, in my view, that affect even things like custody when interacting with DeFi. Now, those might be solvable. But what I'm trying to say is Ethereum is working hard to fix the problems, and hopefully we'll see that happen. And Ethereum will not become the MySpace of the cryptocurrency space, right? That would be my concern, though. And obviously, I don't want to upset all the Ethereum fans out there. I think Ethereum was revolutionary, brilliant, incredible, but they made a mistake in their exuberance, but also just in the fact that they weren't able to sort of look down the road. But there was a philosophical mistake made there, and that was it was akin to what happens in Silicon Valley often, where the statement is said, move fast and break things. But when you're working within a centralized world where you can just like pull an app, pause an app, change the code, change the data, all this sort of thing, you have absolute total control. You can move fast and break things and then fix them. But when you have a blockchain running and it's decentralized, and you have to have some mechanism to get consensus about what changes we're gonna make first. And then once we've agreed on those, how we're gonna go about making those changes. We gotta get everybody on board. It's just incredibly difficult. It's like trying to turn around a train that is just flying down the track super fast. It's just, first you got to stop, and that's not easy. Then you got to turn that thing around. That's not easy. So this is just some of the concerns with the Ethereum upgrade. But we'll see. We're going to stay tuned to that and watch what happens here. Last story of the day. This is interesting to me to think about in this moment when the market has seen a little bit of a drop, and obviously we're going to have FUDers coming out, fear, uncertainty, and doubt getting slung around. Yellen said something to Janet Yellen FUD again, and of course we had Bill Gates, right? And the thing that's interesting about Bill Gates with this that I just don't understand. It'd be interesting to get into his mind and understand what the true motivations behind what he's saying is, because he seems to talk about being altruistic, right? And wanting to, especially when it comes to vaccinations and the things he's done with the polio vaccination and the foundation has done around the world to seemingly try to help. Now, obviously, depending on how you feel about vaccinations, that's going to affect what you think about that. And it's not what I'm wanting to talk about here, but what I am talking about is there's a disconnect between the ideology that, hey, let's help people physically with vaccinations and with their health, but not financially. And the whole thing about cryptocurrency is that it will help people, especially, I mean, it's exciting to think about what cryptocurrency can do for people in first world countries and for Americans and people in the UK and whatnot. But that pales in comparison to what it could do for people in Africa and other regions of the world that are unbanked, that don't have easy access to these centralized banking systems that can, but mostly now are getting smartphones, have smartphones and internet connections, who can do all kinds of really cool and crazy things moving forward, have access to services they otherwise wouldn't. And even, there's something I haven't talked about, this project for Electronium ever, because it was a big thing back in 2016, 2017, and they made some mistakes. They were way too centralized. They are still around, but what they're doing is their niche that they're trying to fulfill is just an example of what I was talking about, and that's why it came to mind. They are creating a way, it's sort of like an Upwork or a 99 Designs or that sort of thing, where people in these poorer regions of the world can provide services, whether it be graphic design or web development or whatever, and then they can get paid in that cryptocurrency. And so the crypto removes all the barriers of them receiving payment quickly and easily, and for people in other places of the world to send them that money quickly and easily. Point being, and then they can take that payment that receives. So let's say a guy in, Algeria does a logo for somebody, gets paid in Electronium. Then he can take that Electronium and go and pay his electric bill. And so Electronium is working to work with the electricity providers within those regions and helping them receive that crypto and then convert it to their fiat currency if need be or whatever. But the point I'm simply making is that Gates is inconsistent here, it seems to me, if he truly wants to see these peoples of the world helped. But obviously there's some motivation there, whether that be maintaining the status quo, whether that be an ideology that believes that the governments of the world, the central banks of the world, and that centralized power has everybody's best interest at heart. I just don't know. I don't know his mind or what he's thinking, but it is a curious thing to me because so much good can and will be done. Anyway, moving back to the final story of the day. Bitcoiners from 2010 have made over $692K more in profits than Uber seed investors. Now, obviously, most people would be incredibly happy to have been an Uber seed investor. I'm sure I would have. Uber has been one of those companies that, you'll often hear people say, oh yeah, X is going to be the next Uber. It was disruptive. It broke into an old and sort of archaic, in a way, industry, taxi services. It connected providers with users and customers, and it just worked, right? So much so that at one point there was concern that, hey, cities, counties, governments, they might try to shut this thing down because there was this whole regulatory system that existed previously for taxi drivers, and it just circumvented that completely. But it happened so fast and so effectively and so widespread, there was just basically nothing they can do. And I think many of the local governments just capitulated and said, we can't stop it. Now, Bitcoin is on an unwavering journey to dethroning some of the world's largest finance and technology companies. We've seen over the course of this last month that the leading cryptocurrency asset, Bitcoin, recently hit $1 trillion in market capitalization value. It simultaneously unseated companies like PayPal, MasterCard, Bitcoin, etc. And we've seen that the entire cryptocurrency market cap is approaching values that are only unmatched. Actually, that's not true. Just Bitcoin itself is only below. There's only 5 companies that are valued more than Bitcoin currently, and it's like the Apple, Microsoft, Facebook, Google, and then there's a Middle Eastern oil company that I can't recall the name of. Bitcoiner Anthony Pompliano observed that Bitcoin has generated a return on investment that is worth $712,000, $500 more than when they made their first venture. This is over $692,500 what the giant U.S. transportation network company Uber generated for its investors in profit. In the last 10 years, it remains mind-blowing to see Bitcoin, the newcomer technology, unseating mainstream companies. And so what is going to happen, I think, here is that we're going to continue to see this trend, that there are going to be decentralized finance platforms like Uniswap and others, especially on some of the 3.0 platforms like Cardano and Polkadot, that are just going to explode and surpass the traditional centralized finance entities that they are replacing. And some of them, I think, are recognizing this. This is why we've been seeing that Visa and MasterCard are talking about accepting and incorporating cryptocurrencies onto their platforms. There's a possibility that this is already in motion, as Coinbase is rumored to have secured some of these firms as clients interested in purchasing the asset. This simply stating that because of this transition, because of this DeFi explosion and boom, we will likely see more and more companies follow suit with Tesla and start to add cryptocurrency and Bitcoin onto their balance sheets. Pompliano, the popular podcaster, asserts many Bitcoin and crypto companies will surpass the valuations of legacy financial institutions in the next 24 months. You are about to watch Wall Street titans crumble at the hands of technologists building open source, decentralized software. And why is that? It goes back to what we were talking about before. In the traditional legacy system, the average person is not allowed to play. And so that's what's so funny about Gates saying that Bitcoin is for billionaires. No, it's the exact opposite. Investing in the traditional markets is for the wealthy. You can't even get into many initial IPOs, initial public offerings, or in as an early investor unless you're a qualified investor, which is you have to have more than $250,000 in assets, and you have to be able to prove an income, and you have to go through all these processes, right? That's not how DeFi works. That's not how cryptocurrency works. Anybody can come in with any amount, anywhere in the world, with just a smartphone. That's all you need. And so that allows for wealth to be generated, massive amounts of wealth. Now, I know that the thought probably is, well, these people are too stupid, that it's dangerous for them and we need to protect them. And that's what all that regulatory stuff is about, and that may be true, but you know what? How do you learn? You learn by making mistakes. Someone who goes and over leverages themselves, and that has happened in the last couple of days, by the way. Many Bitcoin longs were liquidated because of this temporary crash, right? You learn not to play those games. You don't go and 10x leverage everything and end up. There was a story just last night about, I don't think it was BitMEX, but it was another exchange. I think it was KuCoin, where there was a flash crash in the price of Ethereum, way down, and Bitcoin too maybe. And so all these people that were over leveraged, speculating on long positions, got liquidated, boom, just like that. And the crazy thing about it is that the price didn't even actually drop. It could be just one person entering in a sell at a crazy price accidentally, and boom, these get liquidated. And so, yeah, there are these risks. You might hit a painful spot. You might run into, but you're gonna learn from that. And as you learn from that, you won't make those mistakes again. Well, thank you so much for your time today, friends. As always, please be sure to visit blockthrasher.com, sign up for a membership to get more of the free content, and also consider a paid membership for the premium content. Remember, it is always a great day to earn more crypto. I appreciate you all. Hope you have a great day. Talk to you soon. Bye.